Lately, many of you who watch the news or look at price charts have probably had these thoughts. Why is gold acting like this? Silver is dropping this much. Does that mean something is wrong? Especially if you've spent years slowly buying gold or silver with money you worked hard to save. This kind of move can feel unsettling. But today, I want to be very clear. The recent drop in gold and silver is not a crisis, it's a change in direction. And this change began for very practical reasons that everyday people need to understand. First, the most important fact: gold and silver themselves have not become weaker. Gold is still gold, silver is still silver. The problem isn't the metals, it's the direction of money. Money temporarily moved into the U.S. dollar. Gold and silver prices are set globally in U.S. dollars. There's a very simple rule at work. When the dollar gets stronger, gold and silver become relatively weaker. When the dollar gets weaker, gold and silver tend to rise. So what happened over the past few weeks? Globally, signals started appearing that the dollar might strengthen again. And when that happens, people move like this. Right now, the dollar looks better than gold. So gold wasn't abandoned, it wasn't rejected. Money simply moved temporarily. This isn't an escape, it's just a short-term shift. Expectations for interest rate cuts weakened. The second reason is interest rates. Gold and silver do not pay interest. That means, when rate cuts seem likely, gold and silver benefit. When high rates are expected to last longer, they lose appeal. For a long time, the market believed rate cuts are coming soon. Because of that, many people bought gold and silver in advance. But recently, that expectation changed. Rate cuts may take longer than expected. And what happened next? It wasn't panic sellers who left first. It was people who got tired of waiting. This wasn't fear-driven selling. It was a calm decision. Waiting longer doesn't seem necessary. Big players had already made enough money. The third reason is harder for everyday investors to feel. It's the behavior of large institutional investors. Gold and silver had already risen significantly. From their perspective, the thinking is simple. This is enough. Let's lock in profits now. So automated selling begins. This kind of selling doesn't make headlines, but prices react immediately. To regular people watching charts, it looks sudden and shocking. In reality, a plan made long ago was simply executed. Why silver fell more than gold? Many people ask, gold didn't fall that much. Why did silver drop so hard? The answer lies in silver's nature. Silver has two identities. One is like gold, a safe haven asset. The other is industrial, used in factories, manufacturing, and technology. Because of this, when economic concerns appear, silver always reacts more aggressively. When gold moves one step, silver often moves 3 or 4. This isn't a warning sign. It's how silver normally behaves. Is this truly a dangerous moment? Now we reach the most important question. Does this mean gold and silver are finished? The answer is no. Central banks around the world are still buying gold. Government debt is not shrinking. And the value of currencies continues to erode quietly over time. In this environment, it's hard to argue that gold and silver have lost their purpose. Right now, people are simply looking elsewhere for a moment. The mindset everyday people must have. This is the most important point. Gold and silver are not short-term profit tools. If you buy today, hoping to sell next month for a quick gain, you will be shaken out. Gold and silver aren't meant to outperform during good times. They are meant to hold the line when things fall apart. That's why they're usually boring, quiet, unexciting. But when real trouble appears, people always return to gold. They always have practical choices right now. So at this moment, the choices are very simple. If you already hold gold or silver, don't rush. If you're considering buying more, do it gradually, not all at once. And one thing you must never do: don't go into debt to buy gold or silver. No one takes out a loan just to buy insurance. Gold and silver work the same way. Final thoughts. The recent drop in gold and silver is not the end, it's a pause, a moment where attention shifted elsewhere. Gold and silver are closer to tomorrow's crisis than today's headlines, so there's no need to panic. They're simply doing what they've always done, quietly fulfilling their role.